Hello everyone and welcome to a new ATFX video. My name is Gonzalo Cañete and I'm here one more time to give you a market update. And in this occasion is one of the most important monsters in Wall Street. We're talking about NVIDIA, a monster in terms of market capitalization, a monster also in terms of growth rate and returns generating. The numbers are amazing, really good numbers from a fundamental perspective. By the end of the video, I'm gonna share also the charts with you, with the levels, with the targets. By the way, if you have seen our previous report on NVIDIA, pre-result report for the Q1 2025, you will see that we were almost now on target based on the projections we did on the charts on that video. So hopefully in this video, we're gonna again go in the same line, reaching those targets. You will see in a minute. Now, before we start, let me friendly remind you also that you can click on the subscription button if you are not subscribed to this channel. I don't know why yet. Click also on the bell if you want to receive notifications anytime we upload new fresh updates regarding this asset, any other asset, stocks, equities, even macroeconomical fundamentals. We are updating constantly this channel. So click on the bell if you want to receive notifications. And lastly, if you like the content by the end of the video, please pay back with a thumb up and with your comments. Okay, now let's go to the topic. I know you're waiting for this moment, so let's go. It's one of the most important events of this week. The presentation, the publication of Q2 2025 earnings. Let's read some numbers first. Estimation of revenue is between 30 to 46 billions. Is massive, is really good results, and it's also representing a potential 120% more or less year-to-year growth, year-over-year, YOY. It's 120% growth with respect to the previous year, which again is incredible returns. In terms of EPS, $101 per share, which is again super good. Is one of the tops in Wall Street. Sequential growth, 15% growth over the growth. So it's accelerating the speed of the growth. That's the way we can read this number, 50%, which is amazing. And data center revenue, how much revenue they are extracting from data centers? 26.3 billions, which is representing more or less 154% year-on-year growth and driving over performance. Amazing numbers, really good numbers. But again, not everything is positive. We need to also take a look of what could happen if something goes wrong. Again, the growth rate of this company is amazing. The results are amazing. Even if you take a look on the chart, it's absolutely vertical. And we usually say when a company is completely vertical on the charts, obviously at some point a correction wave will come. And if you are, especially if you are a new investor, be aware that any of these potential risks we're going to explain now could hit the company and provoke that correction wave. So better do not enter if any of these events are coming. If you're already a long time a stockholder of NVIDIA, good luck, congratulations. But these factors are important. Supply chain constraints, obviously the constant battle between United States and China, especially in technological industry, is affecting the business of NVIDIA. The restrictions that Donald Trump was setting on China are also restricting the NVIDIA cells, because one of the biggest demands is coming from China, and Donald Trump has been established restrictions in terms of which kind of microchips from NVIDIA can get export to China. So in other words, Donald Trump was demanding that not the last technology can export to China, should be stay on at home, or at least only on the tier 1 partners, which is Germany, United Kingdom. These kind of countries can, yes, import the last NVIDIA technology, but countries like China got certain restrictions in terms of which microchips they can use and which not. Last news, if you follow our daily report at ATFX, the one I publish every morning London time around 8 a.m., you know already this, but the last news is Donald Trump has a concession, has one of the positive points on the negotiation with China. He was also authorizing the media to start to sell the next microchip to China. Not the last ones, but at least new generation compared with the ones they were authorized to export. Every tension, political or commercial trade tensions between China and the United States could get NVIDIA trapped in that kind of battle. So please be aware of this situation. because obviously it could affect the company. What else? Blackwell and Hooper GPUs. What is the projects the company is managing right now? Cosmos AI Spectrum. So it means like the Blackwell new technology. We could go into details, but I'm not an expert on computer engineer. But basically, they developed a new technology that pretended to be faster. They introduced technology like a year ago, maybe more than a year ago. So the point is Blackwell are doing well. The demand is massive, is exceeding the supply. Demand exceeding supply. Actually, it was one of the problems we mentioned last year or last period, right? That how capable they are to produce at the speed the demanding is rising. Cosmos AI and Spectrum X. NVIDIA is not only working on micro chips, it's also working on providing this kind of hardware also in a cloud or networking services, which means it's going to be related with everything. That is taking us to the third point, with strategic partnership. Is cross-industry, collaboration with healthcare, collaboration with automotive, collaboration with industrial sectors, self-driving systems, absolutely robotics, everything is related with this. And that's why they are going to different sources of demand. Now, financial health and some ratios. Debt to equity is 0.10. Keep in mind that last year it was 0.49, so even this number is improving. The debt to equity ratio is lower, which means like for every dollar the company got in equity, they have 10 cents in debt. It's amazing. It's really good, really solid, really strong. They also got a really good ratios in terms of cash flows. Strong liquidity, 3.39%, and 50 billions in buyback program, which for some people, some analysts are reading this as a positive factor, some others in a negative factor. Means in general terms, when we talk about buyback, it could mean that they suspect that the company could be in troubles in the future, but it also means they want to invest in themselves. They want to recover part of the stakeholding on the company, and therefore is also a sign of confidence on the future. Lower leverage and strong cash flows. Watch points we just mentioned: the risk between China and United States, the Blackwell importations on China side. If Donald Trump, last point, is too restrictive in terms of technology to China, one of the risks we mentioned in our daily reports is that China could start to develop the same technology sooner or later. So if you don't allow them to buy from United States, from NVIDIA, this kind of technology, maybe the companies in China got more incentives to somehow sooner or later produce. And we have read certain rumors in that direction that they apparently are developed similar speed on GPUs on microprocessors in China. So that's the scenario at the moment. Finally, charts. Let's go to the charts. You can see on the charts what we call third wave. The third wave is almost on target, which is $190. As you can see, it was almost on target. That was the projection we did in our Q1 2025 previous report on NVIDIA. We are almost on target, but I will say that because we are too close to the target, I won't enter in this company at the moment. Remember, this is not advice of any kind. I will not enter in the company at this moment. I will probably wait until see a confirmation breaking up the $190 per share. In that case, I will probably expect any pullback, any turn on the price to buy and include on the portfolio of the company. Otherwise, the second option is if the results by any chance are going wrong, are not in line with expectations, are actually worse than expected, the price could turn to $160 per share, in which case we could take the opportunity to include it in our portfolio. So $150 to $160 retracement on the price, opportunity to include in your portfolio. Breakout of $190, again, another opportunity to include on the portfolio. Right now, stay on hold until we see any of those prices get touched or confirmed. All right, that's all. I hope you enjoyed this video. And remember, if you really like it, it's free, a thumb up, and it's also free your comments. Share your comments on the video, and we will keep attention on those comments for the next coming reports. Take care, and bye-bye.